Welcome to the Millionaire Next Door podcast with Robert Curtis, CFP, accredited investment fiduciary from Signature Estate and Investment Advisors. In this podcast, we help successful wealth accumulators like you looking to transition to a work-optional lifestyle by helping you build strategies for growing and maintaining your wealth. Robert draws from years of experience and fiduciary responsibility and interviews guest experts to help you build reliable strategies to grow and maintain your wealth. Now, on to the show.
Robert Curtis wants you to understand the ins and outs of financial planning and how he and his staff can support you during changes in your life situation. But along with that, he wants you to feel comfortable in his approach to serving you. So, Robert, please review for us who you are and whom you work with.
Yeah. Hi, Patrice. Absolutely. Thank you so much. I'm Robert Curtis. I'm a certified financial planner and accredited investment fiduciary. I'm with a firm called Signature Estate and Investment Advisors. We are a full fiduciary. We're an independent wealth management firm. And independent is important because we're not owned by a bank or insurance company or asset manager, anything like that. We're purely independent in the wealth management space. We're full fiduciaries of everything that we do. Our core expertise is really in investment management, but we handle every aspect of financial planning. I'll describe later, it's sort of a pyramid as these different facets ascend, but really it's more like a circular type of dynamic rhythm. There's things that come in and out all the time. And I walk people through that. We have what's called a sounding board process. You know, we just interact with clients. A lot of times they're do-it-yourselfers, but they want that help. So they pay us a fee. They're fine paying us a fee. They just want to know what that is that has it open and transparent. And so that's the ultimate model. That's how people like to work. And that's what we do. We don't have commissions. Everything is purely advisory driven. It's pure advice. So people really like that model. I love that model because I'm not a salesperson here. I mean, the only thing I would ever sell would be myself and our team and our process. So our big differentiator is our team, our people and our process. So we're always working on that. Just commenting on the podcast, I think this is our 32nd episode. Started this during the COVID, lockdown. And, big point of it was to get to listeners when people weren't coming into our offices as much. And another underlying theme that I think I've emphasized before on the podcast was really, we're always working on ourselves. So our process is very dialed in, but we're always looking to make it it always needs to be improving. So we're always looking for little things, and this podcast and presenting to you has been a part of that process. And I hear many listeners, get back to me, or the clients. We had one with the accountant we did a couple weeks ago, Tony Watson. I got a call within 48 hours. I'd really like to be introduced to an accounting firm, or possibly this one. So we did that. So those are many things that we do. We have a value-added support, team. And there you go, Patrice. So that's a little bit about who I am. Yep.
And I must say, one thing I really enjoy about these podcasts is the fact that you're usually outside and I can hear the birds in the background. So if you hear that little squeaking noises, those are the birds, really. And you were saying you had some parakeets flying around earlier?
Yeah, we did. We're kind of blessed. I'm starting off, this is pretty early in the morning, so I managed to get a cup of coffee in because I didn't want to do this sans any caffeine, although that would have been fun. There's a lot of birds and a lot of nature, and I find it's a really nice way just to get outside a little bit in the morning. Sometimes we have parakeets, and they're kind of fun and interesting, but they're loud and they're annoying. And maybe you're having your cup of coffee and doing your thing and going through emails, and then they're like, wah, wah, wah. So, you got to take it as, but we had some friends over for a barbecue a while back, and they were like, "Wow, this is like being in a sanctuary or something." It's in an urban environment. There's a lot of trees and there's a
Wonderful.
lot of nature, so it's kind of nice to just maybe start your day off that way and be in touch with that, and as opposed to just purely in an office. So I've got a home office and I can respond to stuff too. So, but most of the time we're in the office. Anyway,
Well, I
back
just wanted
back
to
to
mention that because we can hear the birds in the background. It just sounds so wonderful, and it's
okay.
almost calming. It's a very calming effect. I find it anyway.
Great. I think so too. Maybe it's my age, I'm starting to enjoy that kind of stuff, but it's good. So
But go
um
ahead.
yeah, this is more fun actually, but we'll get back to this a little bit. So so on the investment management side, we have a very disciplined process. We've actually named it our process. It's objective, it's unemotional, it's rules based. So we look at all kinds of fundamental analysis. We look at relative strength and technical analysis. We can utilize both active and passive type strategies, within indices, things like that. We have complete open architecture. We have nothing that's proprietary. We use ETFs. I did an entire podcast on direct indexing, which is, you can reference. That's really the cutting edge in terms of tax efficiency and tax loss harvesting. So we're always bringing these elements in. We're using a lot of alternative investments that I'll get into in a minute that are really very compelling and attractive to high net worth folks. I think they work for everyone and for institutions, but a lot of do-it-yourselfers who feel they've mastered the stocks and bonds, they can't really do this alternative investing. So we can blend that in for them. Just a very disciplined, refined process on the investment management side. And then we work really well with folks who want to partner with someone in that process. Or we see a lot of do-it-yourselfers come in 25, 30 years doing it. They either don't want to do it anymore or their results have not been that great. And I think they find that they, by the interaction, sort of the coaching, our relationship, we're able to get some better results, or together they can make a better decision. I spoke yesterday. I had to speak to a group of 35 tax accountants. So I was asked to speak to them. And then I just gave an analogy that I threw out, but it's sort of like going to the gym. You could do your squats or all your things. If you work with a great strength or conditioning coach, you might say, your squats, you're doing them wrong, or you really need to bend a little bit different because you're probably doing some harm to this other spot, or maybe you ought to blend in some of these, and they could be things you don't know. So it really, folks that enjoy having a partner, and one of the things where we've differentiated a lot that I'll emphasize because a lot of folks get this is we can work with where the client gets the ultimate decision. Now, there's something called discretionary, which most firms force you into. They have sort of a cookie cutter pie chart asset allocation, 15% international, the bonds, et cetera. And then they put you into one of 5 models, and that's how it is. We can work off model. That's a huge, huge deal. Now, let me explain why. So last year was not a good year in the stock market. I mean, stocks were off 20%, which is not good. Bonds were off roughly 15%. That is horrible. That's atrocious. That's supposed to be people's safe money.
Mm-hmm.
So there's maybe 40 categories within the bond area. There was about 2 that worked. Okay. So floating rate, these things that could go up as interest rates went up, and then stuff like short-term treasury bills, those worked. Everything else was a complete disaster. And when I say it's off 15%, there's something called the AGG that's sort of a proxy for bonds, kind of like the S&P 500 might be for stocks, right? That's what most firms, most practices allocate to. We completely avoided that. And so that was a huge, huge differentiator. We can work with the things that are working. We're not in a generic, it's a very, very custom model. And we walk people through that. Some people really get it. And then after a while, they're like, okay, yeah, I'm glad you're paying attention to those details. That's the way to go. Other folks are like, okay, whatever you think, you have my formal investment policy statement on file. You know me, we can take care of it if they'd like us to just delegate it. But if they want to be involved in that discussion, we get a lot of sounding board conversations. People call in, what about this? Am I missing the boat on AI? Have I missed it with NVIDIA, which is rallying? That's a common question. So we
Tremendously.
wait. Yeah, I can answer it, but I mean, by the time this comes out, so we weigh in on that, or maybe some other strategies, or just other things. We have a discussion, so it helps a lot to have a very grounded discussion with a team. It's not impulsive. It's not because I just saw it on CNBC with a 30-second snippet, I'm going to react to that. We pay attention to a lot of that. So people really enjoy that. We get a lot of introductions. Sometimes we get introduced by the custodians. Our assets are held. We don't take possession of any of these assets, by the way. They're held at either Charles Schwab Institutional or Fidelity Institutional, which we think are like the two leading custodians in this country. That's a big deal for a couple of reasons. First of all, on the side, Bernie Madoff, as you remember, he custodied his own assets. So he could make up anything he wanted.
Yes.
Besides being a full-on criminal and crook. I mean, that was maybe a bigger issue. But aside from that, he could say we were getting 35% a year or whatever. He was creating that. Here you can't. So everything is independent. We really, really like that independence. I think our clients value that. Things are independent. There's no conflicts of interest. Everything is out on the table. It's a complete open kitchen. So, but we let the client be involved. And in most firms in the country, don't offer that sort of non-discretionary or the client involvement. There's a small handful. They like us and sometimes introduce us because we can do that. And I'm going to get into some examples of why that's really, really important. So, I mean, namely, I'll just jump into it real quick and give some examples. But if someone has stock, gains in something in a taxable account, or we deal with a lot of concentrated positions, believe it or not, people who have lots of Apple or Microsoft or Monster Beverage or things that have done exceptionally well over a long period of time. There's cases where they might have paid 25 grand for it and it's worth 1.5 million, that kind of thing. You may not want to incur that gain, so we can work around that, but I'm going to get into that a little bit. So yeah, some of our kind of optimal clients, maybe, we work very well in the $2 million space, 3, 4. It's called, the podcast is called The Millionaire Next Door. So we can certainly work with less than $1 million. Some of the less than $1 million are aspiring to get to $1 million, but I call it the overnight 25-year success story. So typically these are folks who've worked really long, really hard. It wasn't an overnight success. We are in no way holding ourselves out that that's what we'll accomplish. That really doesn't work. That isn't how. We don't have anybody like that, unfortunately, but that's probably a good thing. It's like anything. It's just you look at a professional athlete, they didn't just get there. Okay. There was their whole life. They were working with coaches, improving. They had up games, down games. They worked on their process. They stayed in, they didn't get injured. They just kept at it and developing their craft. And now they're sort of a world-class performer. So a little bit of an analogy there. So moving along, I did want to focus a little bit on some of our ideal clients. It's not just the assets, it's the attitudinal qualities, how we interact. We've been through so much together. I mean, a pandemic, right? We've been through a dot-com crash. I was there through the global financial crisis. That was amazing, watching planes getting flown into the World Trade Center and et cetera. So, we've counseled people through a lot of stuff. A few of the characteristics, of our ideal clients, they value relationships based on mutual trust in and service to one another, respect others' feelings and are compassionate in what they do and desire. They have confidence in delegating their wealth management needs to a professional. That can be full delegation, or they want to somewhat be involved. And we like for them, your doctor, you don't want to, I don't think just do exactly what he or she says. I think have a conversation. understand why you should probably partially be your own doctor. That, they see you for a few minutes, but you need to take control of your own health. So we encourage that. We're constantly educating. I think that's a huge part of the fiduciary duty. I love the education. And then I've had clients say, boy, I have really learned a lot working with you, and it's just made me come from a better place. So that's terrific. We just want to get people to a good spot. Back to ideal clients, they have confidence in delegating their wealth management needs to a professional. I might have already said that, but just friendly people, nice people who appreciate our staff and our expertise. I mean, they're great. We've built an amazing staff. I love it. They approach life with joy and optimism. They choose to be intentional in their preparation for a confident financial future. They're enlightened about their own path to financial independence, listening and remaining open to ideas and experience. So we're always having these conversations. They maintain a sense of purpose in their lives, have gratitude for today and ambition for tomorrow. Those are just some attitudinal qualities, but we're in a number of relationships. I've been really blessed to do this over 25 years and working with second and third generation clients. So
That's
we've
amazing.
seen people go through a lot of life cycles. I mean, people lose spouses, people lose children, people get diagnoses, just stuff, that happens, divorces within family. I mean, just all kinds of stuff and great stuff. People get their child into a great college or world-class university, or whatever it is. Those are big life moments. We're very attentive to that. And so, those are all, it's not just investment management and what's our performance. No, we're really dealing with people's lives, and we're dealing with the whole scope of financial planning. The investment management is the core of what we do, but there's comprehensive financial planning. We deal with taxes and tax efficiency. We deal with estates and estate plans. We don't draft the documents, prepare tax returns. Folks that, maybe sell a business. I mean, we've had some folks introduced to us that, sadly to say, they were working with another financial advisor that was great, but at level, when they sold a business and came into some real wealth, they thought, boy, I need to elevate this level of service with a team that understands these sophisticated strategies. And they sort of graduated beyond that, and they actually chose us to work with, often in times through recommendations from their tax or legal advisors. So that's and that's a big deal. And we coordinate with these other professionals quite a bit. And we don't just introduce out, or we really bake that into our process and make that very holistic. So that's been a huge value add. And we're very careful about who we make introductions to, and, get to know their other advisors. So just moving along here, I've talked in the past about we do get to know what really matters to clients. We call it form. So sort of the why is their family. It's all about families, maybe their occupation, what they do for a living, what they're passionate about, their recreation. Those are the why. And then the money is sort of how all that comes together. And then we look at control. What can we meaningfully control? There's things, the markets probably not, but we follow them very closely. But where those two intersect, if it matters and we can control it, that's where me and my team live. And the reason I emphasize is, we do get a lot of questions with things that are sort of background noise, or maybe that you can't control. They don't really matter. Again, a topic du jour, am I missing the boat with artificial intelligence, robotics, NVIDIA, that kind of thing that's taken a big swing up. We actually had some great allocations to both of those, in a diversified way. And I don't know if, everything's going to change immediately and make our lives perfect and the Jetsons is today. It's coming, but there's some, some of it might be a little bit overdone. Some of the stuff in the medical, the wearable, those kind of things I think are amazing. Other things you still have to physically get in there and do them, right? Build something, so, but we have conversations with folks around that. So Real quick, we've been blending in a lot of alternative investments too. I did an entire podcast and went into this in deeper detail with Sam Miller, but just to elaborate, one of the areas we've worked quite a bit with is private debt. And this is like institutional quality investing that is used by very high net worth individuals and then endowments, things like Yale and Harvard. Yale actually, as I've heard, has about 60% of their investments in alternative investments. So these are, right now, these are private companies that are financed senior secured debt. Believe it or not, they're yielding in the 10% range.
Oh my.
And they move very little on their price. They're very, very high quality type investments. And so we're clipping a 10% coupon. I looked at some materials that came out from one of them, and there's a thing called standard deviation that measures the sort of the volatility. The Standard & Poor's 500 is about a 19. This is like a 1. So in a row, it's about 1/19 of it. A US T-bill right now, as of this, we're at June 30th as we record this. I'm seeing T-bills 3 and 4 months out at around 5.35%. That's free from state taxation. If you live in California or other high income tax states, that's a big deal. You're earning what's called a tax equivalent yield north of 6. So in some cases, we're blending these alternatives with the treasuries. If you put those two together, you're a little bit north of 7.5% for super, super low risk. That would be a portion of someone's allocation. And, we might also have stocks or some Apple in there, NVIDIA, those kinds of things that we think will be giant winners multi-years out. But we're blending that in. And the minimums to get into these, in some cases range from $10 million to $150 million. The millionaire next door can't really gain access to that, let alone understand them. We have a research team that does full due diligence on that, and we're able to put that into people's portfolios in smaller amounts, $1,000, $10,000, that kind of thing, within reasonable allocations, maybe 10 to 20% of a portfolio. But we have a lot of discussions with people about that because they really don't understand that. They don't know how that works. And we explain and how that's working, and we get them comfortable. And a lot of people are, there's a lot of concern about a recession coming, right? That's been the talk. Lately, the market has been up dramatically, sort of saying, hey, we think it's going to the Fed's going to engineer a perfect soft landing. Everyone I talk to rolls their eyes exactly like that. We're not exactly buying that. There was a lot of dramatic creation of money, historical, unprecedented. These are things coming from like First Trust and Brian Westbury, the top, one of the top economic teams in the country. So we're not so sure it's going to be a perfect smooth sail. I don't think it is. So if we can clip those kind of coupons and keep people protected, we're not bearish on forever, but we're just saying there's going to be some challenges, and some of the issues that were generated through that massive creation of, money are not over. So let me give you a quick case study as we kind of roll through this and wrap up a little bit. This is a doctor, recently retired. We brought on not too long ago. He had $2 million in an IRA. He had $3 million in what we call a non-qualified, a trust, not in a tax-deferred account. Of that, 1.5 million was in Tesla. He had 1,400 shares, which is, back then, I think it split since then. Any rate, he had a retirement income need of $220,000 a year, and realized Tesla doesn't really pay a dividend. So we onboarded the client back November 21 of last year. Tesla was at $1,100 a share. The client was reluctant to sell any of his Tesla shares at the time. He had such a huge gain in the stock because he got into it very early. He had an immediate need for $60,000 for a pool project he was actually doing. So we wrote what are called covered calls on Tesla to generate $60,000, took care of the pool. We did an additional covered calls that generated $220,000 over the past 14 months with 0 of the Tesla shares called away. So we lowered his risk. We got him the income. That's a very custom strategy. We rebalanced both portfolios around Tesla. So those are really custom strategies that we can look at. And you don't see that much with these folks that have the concentrated stock, but it definitely comes up a lot. Again, Microsoft, Apple, these things that have done exceptionally well. We have a lot of strategies around that, and people, they can't really do it themselves. It's just too many layers of, it's like a surgery, or kind of, you can take care of your health and be healthy, but if you need something, you're not going to perform surgery on yourself. Yeah, that's just not, even a doctor can't do that. But so that's just an example of the kind of things we can do. Just real quick, we're very prompt and persistent. Our team is great. We're very high touch team approach with an open door, open call policy. People can let us know whenever they want a dialogue. We don't have proprietary strategies. We believe in active and passive management, discretionary, full open architecture. Very competitive on the fees. We know what everyone in the country and our town charges. We don't give the farm away, but we're full fiduciaries, and we take it to the next level on everything. A very robust platform, total open architecture, but a lot of very carefully chosen alternatives that may or may not make sense for someone. That has to be an individual discussion, and that's sort of curated, or whether they belong in there. The firm is doing really well. We're having a growing national presence. We're opening offices in Texas that I'm servicing. That's been going great. We get a lot of national recognition. Things are going great. And the podcast, people are listening in. We're trying to share educational ideas. We're very careful about our fit process, and I feel super blessed to know that, the folks I deal with, it's not a huge number of folks, but we really go deep with that, and the relationships are great, and we know them very well. We get to know them very well, people who want that. And the analogy of the doctor who, I hate to say it, I know mine pretty well, but they have a lot of folks they service, and when you come in, they pick up that clipboard,
right?
They review it real quickly, then they kind of know you. The minute you walk out the door, they put that clipboard down and they forget about you until, well, we're always working on, these client situations and reaching out proactively. And they're reaching out to us too, if they have questions, if they have a need, et cetera. So that's a little bit about me. That's what we do. And there you go.
That was a wonderful synopsis, Robert. But how can people reach you if they want to learn more and they want you to get to know them?
Yeah, that's great. Well, I've certainly listening to the podcast, sharing the podcast, liking the podcast, which we appreciate. We recently received an introduction to someone, a client's sister on the East Coast. They listened to the podcast. They shared the podcast. So that's a great way. You can certainly reach me via email. It's rcurtis, CURTISS, @SEIA.com. But the podcast is great. That's interactive. I'm on social media, Facebook, LinkedIn, that kind of thing. You can call my office. You can search our firm, Signature Estate and Investment Advisors, and under the team and the advisors in the bio, there's my information. I'm not hard to reach. You can call the office, email. But the podcast is really a great way to share the ideas, and we try and go deep on these processes. And if anybody, please listen, share, let us know if you have any ideas or questions or anything you'd like to be discussed. And that's how folks can reach me.
And you've wrapped it up. I was going to say follow the podcast. You did, but listeners, by all means, follow the podcast, like it, share with others. And as Robert said, make sure you listen to past episodes as well. They are all extremely informative, not just about topics, but about Robert himself. Thanks for being with us.
Thank you for listening to the Millionaire Next Door podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Signature Estate and Investment Advisors or Royal Alliance Associates Incorporated, member FINRA SIPC. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.